Hey guys, I think we are live today. Give me just a second to get set up.
We are
I'm
live
going to try
today.
to figure out
Give
how
me
to
just a second to get
set up
set
this
up.
desk real quick. Then I'm
We are
going
live
to try
today.
to figure out
Give
how
me
to
just a second to get
set up
set
this
up.
desk real quick. Then I'm
We
gonna do
are
a video
live today.
outside of the desk. Figure out
Give
how
me
to
just a second to get
set
set
up this
up.
desk real quick. Then I'm
We
gonna do
are
a video
live today.
outside of the desk. Figure out
Give
how
me
to
just a second to get set
set
up.
up this desk real quick. Then I'm
We
gonna do
are
a video
live today.
outside of the desk. Figure out
Give
how
me
to
just a second to get set up.
desk real quick. Then I'm
We
gonna do
are
a video
live today.
outside of the desk.
Give me just a
Give me one sec. Not sure why it's doing that. Is that better? Can you hear me now? Oh, okay. I see what happened. Is that better? All right, great. Yeah, I'm gonna try to figure out how to lower this desk down real quick. And I'm not sure how it works. Kind of uncomfortable with that. Oh, there we go. There we go. Now we're getting somewhere. All right, that's a lot more comfortable. So, yeah, good to see you guys today. Market Scraper Ryan. I definitely want to. Uh, let's see, that's more comfortable. The desk was like just too high. So today I kind of want to just talk about the market in general. So first thing we can do here, we might as well just look at the Qs and the SPY. Let me get that pulled up. Just kind of talk about where it's at. I actually watched Jerry's video, Retire with Less, his channel. He has a lot of good information there, but he was sort of talking about a consolidation that he noticed was happening, and I definitely not really a consolidation, rather, sorry, he was talking about the run up over the past like week or two, and how he doesn't expect that to last long. I kind of agree with. Obviously, we had a little bit of a down day today. Let me share this real quick. We go here. Should be able to see that now, I believe. Yeah, so basically what I'm looking at right here is the chart on QQQ, the NASDAQ ETF basically. And so we can see, over the past, 2 weeks, we've really had this pretty intense run up from sort of these lows back here in the 320 range. Now we're up above like 360. So definitely above this. I think this simple moving average I have is the 50-day. So let's add another one on here. Let's see. We add this, another moving average. We want to make that the 20-day. And we can just change that. So yeah, we're well above the 20-day moving average as well. So I guess for me, like, honestly, I don't really expect it to keep going that much more just because of world events, I guess. And I generally don't try to think about investing in that way, but in this case, I kind of am, I guess. And one thing I did want to mention as well is the VIX, which is sort of a measure of volatility, and we can see that volatility has gone way down below 20. And so if we look here, I'm pretty sure it's pretty much like flat year over year now, which is pretty interesting. It's just been swinging a lot. I can't seem to pull that up, but if we go back, to the beginning of the year, it looks like the beginning of just a year ago, the VIX was at, around 20, and now we're right around 19 or 20 again. So pretty much flat on the year, and we've seen this big run up over the past few months where we've seen a lot of volatility. And I guess generally when I'm investing in, regular stocks, I don't really pay attention to the volatility as much. But definitely when I'm, selling options for premium, I do pay attention to the VIX some there because, if the price of the stock stays the same, but the volatility relative or the overall volatility of the market goes up, then oftentimes those premiums can go up, which if you already own a position, can hurt you. And when those premiums go up because of elevated volatility, that's a good time to get into positions as well. And then when that volatility goes back down, then you're sort of riding that free premium, I guess, of the difference in volatility no matter what the stock price does. So that's sort of my thought process there with volatility at least. So let's see. Ryan says he has a stock market challenge for school to grow a 25K portfolio, not real money. Well, if it's in a month, then you have to just invest in like penny stocks or meme stocks or something like that, where because you're not going to get any great performance with Procter and Gamble in a month per se, or at least there's definitely a lot better stocks that could potentially give you that performance in a month. So a month, it's kind of a crapshoot, and there's not much you can do there. And some people are gonna get lucky and be like, "Oh, look how great I am," but it's whatever. I don't think the performance of your stock portfolio and paper portfolio for a month in school is really going to uh, be an indicator of how well your actual investments do over time. So, uh, yeah. Hey, Dan, good to see you. Little known fact, Joe Biden grew up with Nikola Tesla. Um, I wouldn't be surprised, to be honest. Nikola Tesla is probably pretty old. He was born in the 1800s, like 1850. That's actually pretty crazy. I didn't know he was that old. But or maybe he forgot he liked him. Yeah, that too. Um, Tesla is an interesting company, and actually, I guess I wanted to talk about that a little bit as well with the stock split announcement. I actually didn't really look into it all that much, but that's what this is uh, for, I guess. So I think it's just like asking shareholders. So it's not like the board of directors or anything is authorizing a stock split. It's kind of the uh, board asking its shareholders. Um, so yeah, and the other thing, obviously, Google and Amazon both announcing 20-for-1 stock splits. I know Google's is um, set to be effective, I guess. In sometime in July. I'm not sure when Amazon's stock split will go in effect by, which is something I can look up right now. So right now I'm gonna try to look at Tesla's filing though, um, because I think they just like made an SEC filing or something like that, dealing with the you know. Okay, yeah. So it basically says that they, I'll kind of share my screen here. Just says that they announced their plan to request stockholder approval at the shareholder meeting in 2022 for an increase in the number of authorized shares of common stock through an amendment to the company's amended and restated certificate of incorporation in order to enable a stock split of the company stock in the form of a stock dividend. So they said the proxy statement for the annual meeting will actually, talk about that, the details, including the record date and then the date of the meeting and stuff like that, and probably how much they want to split it by. Let's look up the Amazon stock split record. Let's see. Okay, so June 6th is when the Amazon stock split is set to go live, I guess. And let's actually look at Amazon stock because that's something that I don't really look at all that often, to be honest, is Amazon stock. Just because it's not really a company that I actively invest in. I do have some investments, but it's through M1 Finance, so I just kind of buy into it. Speaking of M1 Finance, I actually heard something sometime this over the past few days where basically the some people were saying that they, you know, had drastically different stock prices executed. Like when they submitted buys, the price at which those buys were executed was like drastically higher than the market price at that time. And obviously, they do have those, buy windows like 9:30 to 10 a.m. So it's obviously there could be at some point in those buy windows it got up to that price, and it might not just be clear, but definitely think that's something interesting to look at, and I might try to investigate it a little bit myself. Um, Amazon stock, it's very funny, actually. I would say that at least right now, let me share my screen, or let me wait one sec till I share my screen. I think right now it's pretty interesting because to me, Amazon stock price at this point looks very similar to the Qs, which is kind of funny. Which, I mean, I don't know. I haven't looked at Amazon stock much in the past. Maybe it always kind of looks like that. So this is the Qs. I think I'm sharing my screen. Yeah. So this is the Qs, and then if we look at Amazon, it looks pretty similar. And at least over the past few months, I don't know. Maybe it's always like that. Obviously, it's a large tech company, and so it's going to have a little bit of a impact on the Qs, at least like a significant amount, I would say. So it's just something to look at that I think is interesting. Then the next thing I was going to talk about was M1 Finance, I guess. I guess I can log into my account and check some of that out because that's kind of sketchy if that, is true. But yeah. Yeah, that is interesting, market scraper. That many stocks that are that big are splitting. And Apple did a stock split, I don't know, maybe 2 years ago. I guess it was a while ago now, but still kind of recent. So that's interesting for sure. That some of these bigger tech companies, are splitting, which is, I wouldn't say unprecedented, but just to me, there's really no point, to be honest. But I think it definitely benefits some people. So if it allows more people to invest in the company, then I don't see what's wrong with it, I guess, is my point of view. And let's see. Let's look up my M1 Finance account. I actually probably haven't logged in a while, but we'll try to log in here and see what happens. Probably need to. Give me a second here. And what we're gonna try to do is just like look at the stock price on the days that it executed buys for me and see, if it's similar, if the price that it executed at is close to the price in that time frame or not at all. And we'll see if we can find any differences there because I think that's definitely something interesting that could hurt M1 Finance for sure if this comes to the forefront and seems like kind of a widespread issue. So it says that the web is supposed to be down from 6 to 6:30 Central Time, which I think is right now, but it looks like my account is still up. I can still look at it, I guess. So let's here go to the history. And the last buys I made were in just a few days ago. So let's, for example, look at this Adobe buy. So it was Monday. If I pull up Think or Swim again, we can look at the, well, let's just, yeah, I'll pull up Think or Swim and we can look at the stock price on a pretty granular level to hopefully give us an idea of what's happening here. So we'll change this to 6 months. Oh, why not? Thought I could go more granular than that, but I guess I can just go down to 1 day. So I guess what I'll do is I'll open the web app here, and it looks like the lights actually just turned off, so I'm going to go turn them back on. Go. That's funny, but now that they're back on, we can go on here. So I'm gonna open up the Thinkorswim like actual app, because at least on the web version, I can only go down to 1 day. I can't go down like any finer detail than that. So I want to get down to probably like 5 or 15 minutes and look, or see the open, high, low, and close during a certain time period, and see if my buys are within that range, I guess, on M1 Finance, because I think that's something that could be a problem for that if people at some point notice that that's their buys are not matching up to where the market's at. That's definitely something I've never checked really before. I just kind of assumed it would work out correctly how it's supposed to, but see here. Let's see. If we go on the 30-minute time frame, we should be able to see. So if we go Monday, let's see, where are we at? So this is, let's just go in here. And so, okay, so okay. So right now we're looking at Adobe stock price, and we can see at the 9:30 candle, the open was 433, the high was 445, and the low was so basically 433 to 445 is where that candle was, and my executed price was 443, which is closer to the high end, but I mean it's still within that range. And obviously they give you that 9:30 to 10 a.m. Range, so you don't really know exactly when that executed. And then the next one here is Google. So we'll check out Google and go to, I'm not sure actually which I'll just look at the GOOG to be consistent and sure that I'm looking at the right thing. And we're going to go to Monday morning here. And so Monday, this 9:30 a.m. candle, we had open of 27.36. So basically between 27.16 and 27.51 is where we're at. Oh, wow. That's interesting. So my buy price was 28.24. And if I'm reading this right, oh no, I'm looking a week too early. Okay, so I'm not reading this right because I'm looking on the 21st. So let's look here on the actual correct date. And so if we look at Monday 9:30, then we're between 28.08 and 28.37. So I guess we are, in that case, we're kind of right in the middle of that range. So that's definitely not as bad as the Adobe buy I was about to say, but I was just looking at the wrong week there. Let me get a drink real quick. And then let's just keep going down the list because this is actually kind of interesting, I think. So the next one here is Mastercard. And so we want to look at Monday morning. Interesting things going on. So Monday, the 9:30 candle, we're at 347 to 350. My buy was 349. So again, it seems a little bit sketchy in the fact that most of the time the buys are towards the higher end of the, range of prices, which, I'm not exactly sure why that would be, or maybe it's just a coincidence in this case, but it definitely could be, I guess, that the market was going up during that period. So when they made the buys at a certain time, it was like towards the higher end of that range, or maybe it went down and they made the buys at the beginning of that range. I'm not sure, but going on Amazon here, let's see what happened with Amazon that day. So we're looking at Monday. Monday at the 9:30 candle. Be right here. We're between 32.98 and 33.66, and I'm at 33.24. So that's pretty much right in the middle, I think. Actually, might be closer to the lower end, right? Because we're at 32.98 to 33.66. So yeah, that's actually closer to the lower end of that range. So definitely don't think there's anything sketchy going on here. I'm not sure what that person was talking about. They might have just looked at like a certain price in that range or the close price of that time period. I'm not sure. It looks, fine to me. So this is VGT. Let's look at that one just to see what's going on. So VGT. We can see Monday, the 9:30 candle. We're at 412 to 418. We're at 417. So again, that one kind of near the higher end. And the last one here, Visa, we're at 219. And on this one, we were at 217 to 220. So again, pretty much in the ranges the whole time. And obviously, you would like to have a lower lower buy price, but I think in this case it's not really any problem. I would say I think they're doing just fine with whatever the buys they're doing, and I'm not going to worry about it at this point, at least, because it's, yeah, a few dollars here and there can make a difference over the long term, but at the same time, it's saving me, time and effort by kind of doing it for me. So that's also a benefit in my eyes. Again, I'm not going to worry about it too much. But if you guys are interested in signing up for M1 Finance, they still have a referral program. I think it might end, at least this version of it might end within a day or two, because it's the end of March. I think it might end at the end of March. But if you do, use my link that's in the description down below, you will get free $50. I think you can't click it right now because it looks like they're down for some maintenance stuff that'll probably end within the next 10 or 15, 20 minutes, hopefully. But right now, you get a free $50 basically when you sign up and deposit $100 for a regular account or $500 for a Roth IRA. I think after the end of March, it's going to go probably back to $30 or $10, which it's been before in the past. So I think it's a great platform in general. Obviously, it doesn't give you nearly as much control as with most other investment platforms that let you buy at any point in time throughout the day. But that's not really an issue because for me this is sort of a dollar cost averaging portfolio, and so I'm really not trying to buy the dip ever, and if I am, it's gonna be like a dip that's kind of a long time coming and it's pretty obvious, and it doesn't really matter the exact hour I get in, more so just the day or week that I get in. So hope that makes sense. Let me know if you guys do have any questions or anything you want to talk about. I'd be more than happy to talk about. And yeah, we'll just keep on chugging along. I've been recently haven't really been buying as much in the dividend portfolio as I did throughout most of March. I've been taking it a little slowly. You know, the market has rebounded a fair bit, I would say, and I think that at least I personally think it's a little bit over exuberant given where we are with, you know, the overall economy. Again, see, I always say these things that I don't like to worry about the overall economy, but then I feel like I kind of do, because here I am talking about it, and you know, the overall economy, I think, and you know, with inflation and with these interest rate hikes that we're going to start seeing soon, more of, I think that I just think the market might be a little bit over exuberant right now. But you know, at the same time, it's not going to stop me from investing. I will certainly invest when I see good opportunities. Right now, over the past probably week or so, I just haven't seen many good opportunities. I guess one good opportunity that I just continue to see, and I just cannot get it out of my system, I guess, is Store Capital, um, which is a REIT. It's actually one I'm pretty excited about, and you know, I've just continued to buy, and at this point, I own it in my Roth IRA, so it's definitely a lot. I have a lot more money in my Roth IRA to invest, than I put. You know, I put a lot more into my Roth IRA than my dividend portfolio, for example. I don't know what's going on here, but I guess the point is that I think I have 87 shares now of Store Capital, which I'm really excited about. I think their ex-dividend date is tomorrow. So that'll be cool. And I did the calculation. I'm pretty sure that I'll be getting a full share of worth of dividends that I will drip back into the company. So that's pretty awesome, actually. And I will just continue buying. And you know, once I get to 100 shares, I'll probably, you know, start selling some covered calls just for the heck of it. Um, and once I get to, you know, 100 shares, I'll probably, you know, slow down. But you know, I really only have two other investments in my Roth IRA, which is VTI, Vanguard's Total Stock Market Index Fund. You know, it's not a bad price right now, but I like to wait a little bit more to be buying more of that, and also Realty Income, which I would, you know, like to wait a little bit more on Realty Income before I, you know, buy some more there as well. So at that point, it just kind of leaves it up to Store, and I do think Store is at a pretty great price right now. So, you know, I'm just going to be buying until it stops being at a great price, honestly, or until I get to 100 shares, which will probably happen pretty soon. But let's look here. This is actually pretty interesting. I'm actually going to show the chart here. So we had these, you know, we were up in, you know, the high 30s range just you know, in July, which is pretty incredible that it's been that short of a time, and we're just been steadily dropping over those time periods. We've been making lower highs and higher, or lower highs, yeah, and lower lows basically. So we've just been kind of in this downtrend here. And actually what you can see, if we kind of zoom in a little bit, we can see that, oh, that's not, we can see here that we were kind of coming down and then consolidating here a little bit right around the $29 or $30 mark. And then we had this big green day yesterday where we opened, you know, around $30 and closed around 30 and a half. So it was a fairly nice move there. And then just today, and that was kind of a breach above that 20-day moving average there. I think that's the 20-day, right? Yeah. Or, oh, that's the 50-day moving average. That makes a lot more sense. I was reading the pink line here is the 20-day, and I said that doesn't make sense based on what it looks like. So yeah, this blue line here is the 50-day, and it kind of bounced up above that 50-day moving average yesterday, but today it kind of bounced back below that. So it's sort of getting rejected off that, or at least that's acting as some sort of resistance there. At least it seems like, which is pretty interesting. And so, yeah, I just think it's at a great price for the long term, and we just continue to see these depressed prices. So I'll just keep buying. I think probably back just a few months ago, my average price was probably like $35 a share, and now I think my average price is in the 31 to $32 per share. So that's fantastic, and I definitely expect to see above 35, 37, $40. Uh, I would not see that, or I would not say that's something impossible or very difficult for Store to reach within the next year even. Just because I think they're a great company and they've been growing their earnings, they've been growing their dividends, they've been growing, well, obviously earnings, shouldn't say earnings, that doesn't matter as much for them, but their funds from operation definitely been growing that a lot. So, it's just a company I'm excited about. And I guess I didn't mention in my Roth IRA, I do have, shares of one share of Berkshire Hathaway, that is, and but that was just kind of so I could own it, and it's not really like I didn't really buy it at any particular time. The funny thing is, I bought it at a pretty good time, I guess, um, which it didn't even seem like the best price to me, but stock has just done great since then. I think I'm up probably 10 or 20% since then. But the thing I wanted to look at here right now before I got sidetracked to start talking about Store's valuation is I wanted to look at the options chain for Store, because it's like I said, I want to eventually start selling covered calls once I get 100 shares, and I've looked at it before, and it's generally the options are pretty crappy in general. For one, they only have monthly expirations, and most of the strike prices are kind of spread out, so it's not that easy to get a good strike price. And also there's not much premium either. So if we go here, and I will share my screen again, just looking at the options. So this is for April 14th, which is really only 2 days away right now, or sorry, 2 weeks. But if we go here and look, for example, the $30 call is trading for $30. Well, you could really say $40 because it's the mid of the bid and ask, but the last trade was at $30.30, and then the 32.5 strike is at 5 cents. And honestly, like for me, Store Capital, it's not something I'm by selling options on it. It's not. I would not be trying to get a ton of income off of it. I would not be trying to wheel it necessarily where I want to get called away and then sell puts and get reassigned, for example. It's just something that I would want to hold on to my shares and sell calls on that are at a comfortable price above the share price, and hold on to those shares. So for me, I would probably be looking at the $32.5 strike, and obviously it's only 2 weeks away, so you can't expect to get a ton of premium from that, but that's still close to it. That's still like a 10% move to get to 32.5, and they're only trading for 5 cents, $5. So I think that's pretty interesting. I think there's just not a lot of volume. Like you can see, volume here for all these options is just like pretty low. Open interest is pretty low. So I think it's interesting that open interest for these strikes way up here are so high. I think that's kind of interesting actually, but I don't know. And looking out, I would probably at this point sell at the May 20th. So as far as calls go, even at the 32.5 strike, it's still only $15, which is really not that much at all. And at the $30 strike, $30 strike is $86, which is pretty good. And at that point, it can move like almost a whole dollar above that, and you're still like breaking even. So, to be honest, I think if I own the 100 shares right now, I might be tempted to sell that $30 strike price call for May 20th. And even though it's pretty much right at the money, it's a pretty nice premium there, and your break even would be like $30.86, or at least that would be like your like you wouldn't lose out on any gains until $30.86. Any potential gains, that is. So uh, that is, a strike price I think I'd definitely consider, just because, if it went up to $31, then I could still sell puts at like the $30 strike and get a lot of premium for that. If I was, my shares were called away at $31. So definitely an interesting situation. And obviously, I'm not going to make a ton of money by selling covered calls on store, but ideally, it's just going to be a few extra bucks here and there, and it will just help me grow my account that much faster. And it is in a Roth IRA, like I said before. So again, that's all tax free. So that's sort of my plan with that. And Marcus Gerber asked if I have one share of Berkshire A. No, unfortunately, it's one share of Berkshire B, which I'm not complaining about. It's a good company, and I guess let's see. Yeah, it's a good company, and so far my one share has done pretty well. Oh, it's at 357. Oh my gosh. I think I bought in at like 280, and I was like, man, this is not really the best price here, but I guess I just want to own a share, so I'll buy a share. Options trading for Berkshire A. I wonder what the volume is like on that. Let me see if there's even an options chain. Yeah, there probably just isn't even options available for Berkshire A. Like I'm here on Yahoo Finance, I just look up the options chain, and it says options data is not available. So I would guess there's just like no options available for that stock. Which, I mean, I think some companies there's no options trading probably. Like new company, I'm not sure. Maybe there is options for most of them, but let me look at my account here, and I'll just not gonna show it to you guys right now, but yeah, we can see Berkshire A, or sorry, Berkshire B, that is. Yeah, I'm up 28% on my position. My average cost, I bought it in July, so my average cost was 278, and I'm up 28% on that position, which is pretty incredible. Just because I just think that's pretty funny, because everyone, I guess a lot of people over the past few years would say that, Warren Buffett's falling behind, and Warren Buffett's uh, losing it, and not with the trends and stuff like that. But he's still investing in solid companies, and it's not all him either. There's plenty of other people making decisions at Berkshire Hathaway. So that's that. And yeah, I have a lot of respect for him. Obviously, he's done a pretty incredible thing with how much he's sort of grown his portfolio and stuff like that. But where is the? Wonder how you. I was gonna try to look at another source on the option. I'm not even sure how you look at the options on Fidelity. Maybe it's just not available because there's no options. I'm curious how you view options. I think I've looked at the options before, but never actually. Yeah, there's this little options button. Maybe it just wasn't available with Berkshire A. Yeah, there's just no options little button to click on with Berkshire A, so probably just no options. But I feel like options on Berkshire B would be pretty dry as well. So let's see. So calls, let's just look at the April 14th. I don't know how this works. Oh. So at the April 14th or at the April 14th expiration. So right now they're trading at like what, 357 and a half. So the 360 call is getting you like 1%. I guess the options aren't terrible, I guess, the calls. But, I don't know. I think it'll be a long time before I have 100 shares of Berkshire Hathaway, to be honest. If ever, because I just don't see myself ever really getting that interested in them as a, actual investment. Like, I'm not saying I'm not investing in them, but I guess it's just not something that I would spend a lot of time looking at or thinking about, just because of it's really sort of like an ETF in a sense. So uh, it's just not something I'm all that interested in. Something I was interested in for the sense of saying that I invested in Berkshire Hathaway and having the opportunity if I wanted to go to the annual meeting. But it's not something that in the long run I'm really gonna spend a lot of time on. And actually, uh, in terms of like my actual, I guess we can talk about my goals sort of for my dividend portfolio, which is that my dividend portfolio really is just a learning exercise at this point, and something where I'm trying to, lights turned off again. My dividend portfolio at this point is something that I'm trying to use to just learn a lot about investing in stocks and doing some basic, stock analysis and getting my hands wet or my feet wet, really. I feel like that's the saying, your feet wet, not your hands wet. Um, just getting my feet wet a little bit and having the ability to get comfortable investing in individual stocks and researching individual stocks and um, dealing some degree with the emotions of it and trying to learn how to control my emotions and stuff like that, because I think that's pretty important as far as investing goes, controlling your emotions. So at this point, my dividend portfolio is just kind of a learning experience for all of that. And so I'm really not investing all that much money in it. Like, I certainly have a lot bigger portfolios with other accounts. Mainly I have two Roth IRAs, with one with Fidelity and one with Vanguard, and both of those accounts are probably between $15,000 and $20,000 each in value. So those are, I would say, my main accounts. And then I have some options investments with Robinhood, and then I do have just like a regular brokerage account with Fidelity as well, or sorry, with Vanguard as well, that I just have some index funds in. That's kind of, I'm not really sure what the purpose of that account is. I think I started it probably like 5 years ago and haven't really touched it at all in a few years. So that's just kind of sitting there and slowly growing over time, and eventually I think eventually it'll be worth a lot as it continues to grow over time. So those are kind of my investments. And the thing for me is, as I learn more with my dividend portfolio, obviously I would want to invest more money in it. Right now, I think my primary investment goal, for in terms of like actual amounts of money invested, is just to max out my Roth IRA every single year. And I'm pretty close to actually finishing that for 2022 already. I think I've contributed maybe $4,500 to that. But for me, it's going to be like obviously a front loading game, because probably most of my income from the year is going to come in the first third of the year, because I'm on co-op, pretty much working a full-time job right now, working 40 hours a week, so getting a fair bit of income from that. And then obviously in the summer semester I'm going to be taking classes, so my income is going to decrease drastically unless I start popping off on YouTube. Then we might get somewhere, but I don't think that's going to happen anytime soon. And for me, it's kind of a slow and steady game on YouTube. But regardless of that, like I said, in the long term, once I'm able to max out my Roth IRA and have plenty of extra money there, I've talked about this a little bit in the past. Real estate, I'm still not really sure. I've heard a lot of good things about it and being able to grow your wealth with it a lot. And I think for me, right now in my life, the thing that makes real estate, I think, a difficult thing for me to commit to is sort of the liquidity issue, I guess, because you have to tie up, some liquidity when you're, say, saving for a down payment or actually, buying a property. You're tying up liquidity in that property and you're not really getting much immediate return on it. And for me, at this point in my life, just because of the smallish amount of income I'm receiving compared to what I'll probably be receiving in a few years. Liquidity, I guess, with my money is something that I sort of have to pay attention to a little bit. Um, I don't want to get, too gung ho investing in the stock market and not have any cash left over if I have some bigger expenses come up or something like that. So I think for me, I just need to start saving for a down payment if I want to, and just kind of bite the bullet and not really sweat it too much over the liquidity, or not liquidity, but at that point it's just like I just have cash sitting in the bank that I don't want to just leave there, but I have to keep saving it up or else I'm never going to have enough for a down payment. If I, I'm constantly investing whatever I have that's there, then I'm never going to reach enough for a down payment, and I certainly don't want to withdraw from an investment account for a down payment. So it's something I would think I'm just gonna have to get over at some point when I eventually make that decision. And because of my lower income, it's gonna take me longer to save for a down payment than it would otherwise if I was, working like a full-time engineering salary job in a few years. It'd be a lot quicker. But at the same time, there's that opportunity cost, because if I'm able to get started, within the next year on real estate, then I'll be ahead of the game more and have more room, more time for growth. And, ultimately, I think the goal for me would be some sort of like house hacking scenario or rental where I'm able to pretty much cover the mortgage. Um, and obviously, like, since my income is pretty low, the mortgage would have to be something I consider very heavily as to, can I afford to pay this mortgage for, 3 or 6 months if for some reason I can't rent this place, because that's something that I would have to at least figure out, I think. So those are kind of my thoughts on real estate. I definitely need to get more educated on the whole process, like uh, you know all the legal processes that you have to go through in order to actually buy a property, all that kind of stuff. I have to get more educated on that. And so that's something would say I'm dealing with as well. And yeah, I think I definitely want to put some more time into researching that kind of stuff. I just need to put aside the time for it, and I'm hoping I can do that, you know, sometime this summer probably. And we'll see where it goes from there. It's definitely something I'm excited about, but at the same time, it's something that I want to take my time with, and I want to kind of understand it. But that's also something I struggle with too, is I don't want to kind of jump into something because I don't have the experience. I don't feel that I'm ready for it, but the only way to get that experience and really feel more ready, I guess, is to jump into it. So, yeah, I'll probably try to do something with real estate over the next year or two and see where it goes. And maybe I decide, it's not something I want to be involved with. And, that's perfectly fine, I think, if that's what I decide. But I guess my take is that a lot of people, they just talk with a lot of enthusiasm about the power of real estate to, build wealth. And I guess I really understand it. Like, if you can if you can do the house hacking type of thing where you're, basically renting out part of the building and living in the other part, and then you're pretty much not paying a mortgage. Well, I mean, you're pretty much living for free at that point, and so um, even if like you're not cash flowing anything, you're still living for free. And then if you eventually move out, like at that point, you'd be able to rent out the other half or rent more for the whole thing. So then you're definitely going to be able to cash flow it, I would say. And so it's just kind of a winning game, I think, for the whole house hacking type of thing. And I think, sometimes for me, like I get kind of in this narrow kind of vision of what like a property would have to look like in order to like house hack it. Like it would have to be like a duplex type of thing. But I think even like regular homes could work for like house hacking and covering your mortgage and living free. So I think that kind of stuff is really interesting, and probably for like my first type of real estate investment, that's probably what I would be looking at. So uh, let me know if you guys do have any experience with real estate, or what your opinions are. I think that's a pretty interesting subject. Obviously, I talk mostly about stocks and investing in the stock market on this channel, but I think that real estate is definitely something that can be pretty powerful, like I've said. So um, I didn't have really all that much else I wanted to talk about. Let me see if there's anything going on that I would want to talk about that is interesting. Let's see here. Oh, the one thing I guess I'll mention is the company APD. So if we look here, let's just pull up FinViz because it's kind of easier to look at. But if we look at APD here, I've been talking about this one for a few weeks now. I think I mentioned it definitely in my February dividend stocks, or like February um, dividend portfolio like review, all talking about dividends I received and companies I've been buying. Definitely talked about APD in there, and I made I think 2 videos within the past month probably on like dividend stocks that I thought were undervalued. Just made those videos because I thought there were a lot of good high quality companies that were undervalued, and APD was definitely one of those. You can see here it got all the way down, I think below 220. I think the 52-week low is probably like 218. Let's see if we can find it here. So much information, it's hard to find. So it just lists the distance from the 52-week low. Oh, 52-week range is 216. So yeah, it got down to 216 here, and I was kind of buying, probably from like the 250s down and then a little bit back up. We can see now it's already above the 50-day moving average again, which is pretty incredible that it's kind of moved up that quickly in the matter of, well, you can see here in the matter of since, what day is that? That was March 15th, so about 2 weeks. It's moved up pretty consistently. Only had like 3 red days in 2 weeks, more than 2 weeks. Well, 3 red days out of like 12. So about 25% red days. I guess we can compare it to the overall market to see how many red days the market had. And market had, I guess the market had 2 or 3 red days as well, but APD was definitely way, I would say it was further beaten down than the overall market. So the recovery um, is that much more spectacular and sort of unexpected, or maybe unprecedented as well. So I guess that's something else I wanted to talk about was APD, because that's one I'm uh, pretty, I would say pretty heavily invested in at this point after the recent months and the recent downtrends. I'm pretty heavily invested in APD, and it's one that I'm fairly excited about. So just wanted to mention that as well. So that's pretty much all I have probably for this live stream. I think we covered some good topics. Definitely would love to hear any questions or comments in the comment section below about any questions you have about any stock market news you think is interesting, about any insights you might have on real estate to share, because I'm always looking for more opinions and I guess more ideas. And if anyone wants to come on the live stream at any point and talk more about real estate specifically, I would love that. And give me some tips or give me some advice or talk about your experience. I'd really love to hear about real estate more. Like I said, obviously that's something that I want to learn more about. So thanks for sticking around. For those of you that have, I know the the 7 o'clock live streams aren't the best time for everyone, but that's kind of what works for me. I am I'm on the rowing team at the University of Cincinnati, and we practice like 5 a.m. to 7 a.m. So I normally go to bed like pretty early, before 9 o'clock most days. So that's why I have the streams at 7 o'clock, so I can be done by 8 and get ready for bed. But I definitely appreciate the support on the streams. Obviously, some of them are more interesting and exciting than others. Hopefully, I'll have a guest back on next week to sort of talk more about what they're kind of investing in and how they invest, so I can share it with you guys. And definitely let me know if you guys do enjoy these live streams, or what you enjoy more in them, and what I can do to improve them in the future. Definitely appreciate any feedback you have. But I should have another video coming out Saturday, and this one is going to be basically about another script that I created that I'm going to put on GitHub for you guys to be able to use in your dividend portfolio spreadsheets. I made a fairly simple script a few weeks ago that I posted a video about, and not really sure if anyone's actually used it, but definitely let me know if you have. That's something that is sort of a super exciting project for me, and I hope to continue working on these and sharing them with you guys. So if you do enjoy them and appreciate them, definitely let me know. So thanks again for being here, and I'll see you later. Bye-bye.